Welcome to PortfolioCasts, the podcast where we break down real investor portfolios using publicly available data.
In this episode, we're analyzing Daniel Loeb from Third Point, based on their latest reported 13F filing, exploring the key holdings, portfolio concentration, and what the positioning might tell us about their thinking.
Mike, looking at Daniel Loeb's latest moves at Third Point, it's clear he's playing a very high-stakes game right now. We are looking at a portfolio valued at $8.3 billion. That is a massive amount of capital under management.
It is a huge operation, Sarah. Loeb is famous for being an aggressive activist, but right now the portfolio is sitting at a modest 0.5% overall gain. Today was actually a bit of a struggle for the fund. It saw a daily drop of 0.86%.
Let's dive into his biggest bet. PG&E Corporation makes up over 9% of the total portfolio. That is a massive commitment to a utility company. Why is an activist like Loeb so heavily invested here?
It's a classic Loeb play. He is holding 50,100,000 shares. That position is worth about $782,061,000. Even though he trimmed the position by nearly 2% recently, it remains his top conviction.
Usually, Loeb wants to shake things up and fire board members. Does he see PD&E as a turnaround story?
Absolutely. It's a value play with a complicated history. The current price is around $15.61. It has a very reasonable price-to-earnings ratio of 12.7. For utility, that's attractive.
And it pays a dividend of 1.27%. It feels like a defensive anchor for the $8 billion fund.
Exactly. The stock is up about 3.5% overall for him. It's trading toward the middle of its 52-week range. That range goes from $12.97 up to $17.95.
There is some news on that front as well. PG&E just scheduled their fourth quarter and full year 2025 earnings release and conference call.
Investors are watching those numbers closely. They want to see if the operational improvements Loeb has pushed for are actually hitting the bottom line. With an earnings per share of $1.22, there is pressure to perform.
Moving to the second spot, we see Amazon. This is interesting because he actually increased his stake here while others might be taking profits.
He added about 3.69% to the position recently. He now holds 2,810,000 shares. That's valued at over $671,900,000.
Amazon is trading at $239.12. It's been a very strong performer for Third Point. They are up nearly 9% overall on this trade.
The price-to-earnings ratio for Amazon is 33.3. That is high compared to a utility, but for a tech giant, it is actually quite disciplined. Loeb clearly likes the growth trajectory.
It's also very close to its 52-week high of $258.60. Does it worry you that he is buying more at these levels?
Loeb seems to believe there is a lot more room to run. He is looking at the cash flow. Amazon's earnings per share is $7.08. That is a powerhouse number.
There was a recent update from the Liberty All-Star Growth Fund regarding Amazon as well. It seems many institutional players are circling the stock right now.
They are. And that leads us directly into his third largest holding, NVDA. Loeb added 1.79% to this position recently.
NVDA is the AI story of the decade. He's holding 2,850,000 shares. That is worth $530,755,000.
It's a volatile one for him, though. He's actually down 0.2% overall on the position. The current price is $186.23.
The price-to-earnings ratio there is 45.8. That is a very rich valuation. It suggests Loeb is expecting massive future growth.
Look at the 52-week range for NVIDIA. It has been as low as $86.62. It peaked at $212.19.
There is a lot of talk about NVIDIA joining the $3 trillion club by the end of 2026.
That is the big prediction in the news right now. If that happens, Loeb's $530 million stake will look like a masterstroke. He's willing to sit through a daily loss of 0.4% to catch that wave.
So his top three holdings are a utility, an e-commerce giant, and a semiconductor company. That accounts for roughly 23% of his entire portfolio.
It's a barbell strategy. He has the stability of PG&E on one side. Then he has the aggressive growth of Amazon and NVDA on the other.
It's a shift from his traditional activist roles where he might target a struggling consumer brand. Here, he's betting on infrastructure and innovation.
He's following the money. The utility sector provides the power for the data centers that NVIDIA and Amazon use. It's all interconnected.
But he did trim PG&E. Why reduce the top holding if you believe in the infrastructure play?
It might just be simple rebalancing. When a position reaches 9% of an $8 billion fund, you have to manage the risk. A 2% trim is just a haircut.
Meanwhile, adding to Amazon and NVIDIA shows he is leaning into the tech momentum. He's putting more capital into names that have high earnings per share.
Amazon $7 EPS and NVIDIA $4 EPS are the engines here. He's betting that these companies will continue to dominate their respective markets.
Even with the daily dip in the portfolio, Loeb is playing the long game. Being up to 0.5% overall isn't a home run yet.
No, but with $8 billion on the line, he is positioned for a massive payoff if the AI and utility trends stay on track.
Mike, we were just touching on the scale of Daniel Loeb's bets. Let's dive into the heavy hitters. He's made a massive move on Microsoft Corp recently. He increased that position by 175%. That is a huge statement.
It really is, Sarah. Microsoft now makes up 6.9% of the total portfolio. That is over $505 million. He's clearly betting on the AI narrative long term. There are predictions the stock hits the $3 trillion club by 2026. Even though he's currently down about 11% on the total position, he's buying the dip.
The technicals show it's trading around $459. That is well within its 52-week range of $344 to $555. But what about the industrial side? I see a new interest in Norfolk Southern Corp.
That's a classic Loeb activist play. He's built a 6% allocation there. That's worth nearly $480 million. The rail regulator just sent a huge $71 billion deal back for a redo. This creates exactly the kind of friction Loeb loves. He wants to see operational improvements to unlock value.
He's also looking at Union Pacific Corp with a $200 million stake. It seems he's very bullish on the rails right now. But I noticed he's cooling off on semiconductors. He reduced Taiwan semiconductor manufacturing by 23%.
He's taking profits there, Sarah. His overall gain on TSM is over 22%. The position is still worth $376 million. Some analysts are downgrading the stock after its best quarter ever. Loeb is likely just locking in those gains while the PE ratio sits at 25.
Let's talk about the consumer side. I'm fascinated by Casey's General Stores. He added nearly 39% to that position recently.
Casey's is a momentum darling right now. It's trading at $640, which is right at its 52-week high. Loeb has $320 million riding on this one. It's up 13% for him overall. It's a very steady, high-performing retail play.
Speaking of high performers, look at Comfort Systems USA. That stock price is incredible. It's trading at over $1,119.
It's a monster. Loeb is up 35% on that position. He added about 8% more recently. Even with a PE ratio of 46, he seems to think there is more room to run. It's a $223 million position for him now.
On the flip side, not everything is green. Flutter Entertainment is a bit of a sore spot. He's down over 25% on that one.
Yeah, that's a tough one. He actually added a bit more recently, but the daily change was a 6% drop. It's a $211 million position. He's fighting the trend there. The 52-week range is broad, but it's currently sitting at the bottom end near $188.
What about the energy sector? I see some big trims in Vistra Corp and Talon Energy.
He's retreating there. He slashed the Talon Energy position by 55%. Both Vistra and Talon saw double-digit percentage drops today. He's clearly rotating out of those power plays. Maybe he thinks the easy money in the utility trade has been made.
He's also playing in the financial space with Capital One and LPL Financial. He trimmed both of those slightly. Capital One is still a 3.5% allocation, though.
Capital One has been good to him. He's up 12% there. He's holding $331 million worth. It's interesting to see him balance these with high yielders like Brookfield Corp. Brookfield is yielding over 7% right now.
Before we wrap up, we have to mention the smaller, more speculative bets. He has a small position in Aurora Innovation. It's only the tiny fraction of the portfolio, but he's up 121% on it.
That's the Loeb style. He has these core, massive positions like Microsoft and Norfolk Southern. But then he peppers in these high upside tech plays. He even has a $56 million stake in Core Scientific, the Bitcoin miner. That was a new buy recently.
It's an $8.3 billion balancing act. He's managing a lot of moving parts. Today the portfolio was down slightly, but he's still in the green overall.
It's all about the activism. He's not just buying stocks, he's buying seats at the table. Whether it's rails or tech, he wants a say in how these companies are run. That's why he's one of the most watched men on Wall Street.
It's a fascinating look at how a master strategist moves. From $1,000 stocks like Comfort Systems to deep value plays in the rails.
He's positioned for a very specific type of market. One that rewards efficiency and aggressive management. We'll be watching those Microsoft and Norfolk Southern positions very closely in the coming months.
Thanks for the deep dive, Mike. That's the breakdown of Third Point's current landscape. For more portfolio analysis, stay tuned to our next deep dive. I'm Sarah.
And I'm Mike. Thanks for listening.
Thanks for listening to PortfolioCasts.
This content is for educational purposes only and should not be considered financial or investment advice.
Any figures, prices, or portfolio values discussed are approximate, based on public filings and used for illustrative purposes only.
The views expressed are interpretations of public information and may not reflect the investor's current positions.
Follow PortfolioCasts for more investor portfolio breakdowns.